Okay, I think we're ready to get going. Just want to make sure we're ready to record. Good to go. All right, great. Well, welcome to day 5 here. Want to get through a little bit of this information pretty quick because I want to get into the Excel document and the homework. So what we're going to do here is we're going to review the homework. It's pretty important to our today, to what we're doing today. We're going to review the day 4 materials, but we may uh, look at that a little bit later. Get into the live market session, look at other instruments, and then spend some time with Q&A. The bulk of today is going to be in the market session. Excuse me. So with that, let me bring up the homework from last night. All right. And the homework you had for last night was to take a look at your charts and put this together, get these numbers out. And again, if your numbers are different than mine, I'm not going to worry about it too much. The key thing in all of this is that you worked to get those numbers out there. There we go. Okay. So from yesterday, I got to move I got an oil chart up here. I got to move that. Second as I bring up my yes. Almost there. Okay, it's just populating here. I had closed this chart. Was trying to move this chart and accidentally closed it, so I'm just waiting for it to repopulate. I'll bring it up. So what I did in the overnight was to take a look at the levels and start populating the levels in the fields here, and start to get a context for what the market was trying to do. And pretty obviously yesterday it was trying to move lower. It did a pretty good job of that. Our open at 23.75, much higher than the previous day. So the previous day's open was 1905.50, and this opened about 22 points higher. There we go. All right. So that opened about 22 points higher, and then the IB, the first hour of trading, 25.75 down to 18.25, and our close was lower. So one of the things that I do as I'm looking at this first sheet, this first spreadsheet, and this is why I have these highlighted in yellow, is I'm looking at the open and the close and the VPOC. The other, if there's a fourth element to getting a quick context, so if there was a formula that I use for kind of a quick context, shortcut for context, it's the open, close, VPOC, and then overall volume for the day, which was about 1.8 million. Previous day was about 1.3, so significantly higher. And the reason I do that is because when I look at volume, if price is moving up higher in the week and volume is coming out of the market, that just tells me that even though it's moving up, it's not being accepted. It's basically the Super Bowl ticket example that I gave you a couple days ago, where you could have a few participants in the auction left, and yet they're continuing to push price higher. And when they're done, we're likely to get a pretty big move down. So I start looking for that activity and for them to be done. So the other element of that would be volume. So what I'm looking at initially is once again, is the open, the close, and VPOC in this chart. And you could add overall daily volume to that as well. And these four elements will start to give you the overall context of the market. And that is to be put in context to the overall chart in terms of whether or not you're in a swing high, are you in a swing low. I remember yesterday we looked at the different areas, swing high, swing low, and how the low volume areas start to separate the different swings, so that let's say you come down through a low volume area and you can see a high volume area, a price distribution zone, then a low volume area. You come down through that low volume area, and then you have, and I'll just show it to you here. So this is what we talked about yesterday. So this is the ES volume profile. This goes back to June. You can see volume waning as it comes down right now. So what we would be looking for with acceptance, and we still may get that, if you look, what you'll see is kind of an inverse here of volume. So as price has been coming down, it's also been smaller as it's come down. Now, the individual days have seen some pretty good volume, and we would expect that, especially at all-time highs or near all-time highs. We would expect volume to be lower on the day as price is moving higher, and we would expect overall volume to be higher as price is moving lower, as participants look to liquidate their positions. So what we talked about was there is kind of a natural swing between this level. I'm going to make this a little bit bigger so it stands out. And what you're looking for in any market is you're looking for these natural kind of swing areas. Red, I just want to make these bigger. Looking at the screen, I want those to pop a little bit more for you. So after looking at a couple of charts for a little while, it won't take you too long to start to identify these things. So what I can see up top here, swing high, swing low, high, back down low, high. You can see these things, right? And then when it breaks through, it comes down right? It comes down, puts in a swing high right there, swing low, gets up to this high volume area, comes back down. And what this starts to mean to us is that these levels, and then we've got a little bit of this is a major low volume area, this 1906, 75 to 1907 quarter is a pretty major area. But what that means is that as we look at these distributions, especially these major ones, what this chart tells me is that if price is between this 37.75 and 44.75, I can see how price acted, moved up quickly, moved down, bounced off this level. Once it moved back up above that level, this held. So this is kind of a DMZ, demilitarized zone, if you will, for me, between this distribution up here from 45 up through this 80 level, and this distribution below from 38 and a quarter to this about 1910 down to that 7 and a quarter 0675 level. So this level starts to become of relative importance in all of these levels that I can see where we have these major swings. And again, you know that the market isn't perfect. Sometimes it's going to come out, it's going to test outside of these swing areas. But in general, what I'm looking for is if price starts getting above this 1910 area, then I'm going to start looking for price to move back up to 1475. And my expectation at 1475 is that we're going to start to get volume and we're going to see price rotate. And that's going to move, price is likely then going to test up to that 1725. And there may be an opportunity for short trade at 1725. It really depends upon the day. But if price comes through 1725 with some volume, then I'm going to be looking long on a retest of this area, 1725, this low volume area. And then I'll be looking for a target right in front of this high volume area, probably right around 2350, 2375, with a potential test back up to 3075, 31. So this level around 1910 starts to become pretty important to me. And when I look at what's happening right now in the market, here's this 1910 level right here. And the print since moving up has been relatively weak to the offer. It doesn't mean that this market is coming down. It moved up with some strength when there was some announcement out of Russia that they were going to, Putin was going to start easing tensions in the Ukraine area. Let me just bring up a profile for this overnight session. All right, price came up, and if you look where we have our low volume area, it's not a surprise. It's not a surprise to me. Shouldn't be a surprise to you at this point. That price, when price came through right there, 0675, right? 0675 to about 07 and a quarter. This is a level we've been talking about for a couple of days. It's a longer term low volume area, right? So if we go back to this chart, we'll see that level right here, right there. So, and it's a longer term low volume area. So it's not really a surprise to me that price moved above that. And then if you look, I'm going to try to make this bigger. I know that it's real hard to see sometimes, so I apologize for that. Make this a little bit bigger so you can see this better. And now you can see at once it came through this morning, it tested back down, and then from 725 moved back up to 14. And if we go back now and look at what we have here, this high volume area is right at 1475. So it's not surprising to me that price moved away from here all the way back up towards this high volume area. Okay, not a surprise. So right now, and we need to wait for the open, which is going to be in another 13 minutes. But what we're looking for, so as I do this homework, these levels start to become very important. This is a key level, this 1907, 1906, 75, 1907 quarter. This is a key level, as well as this at 1917. And if we get through 1917 with any kind of volume, again, I'll be looking for 24, 25, and possibly up to that 30, 31 level. If we struggle at this 17 level and we start moving down, even if we get, what I'm looking for this morning is acceptance around this 14, 15 level. Looking for acceptance. I'm looking for, after the open, if price moves up and we start getting volume and VPOC around 14, between 14 and 15. We start getting heavy volume around there, then what this is telling me is this market is auctioning relatively normal, and I can expect the test to 17, possibly back up to 24.75, and if price moves back up to 24, 25, say 24, 25 level, 26, and VPOC or high volume area starts being established here later in the day, in the morning or the day, then that tells me I have acceptance higher. And at some point, it's likely to go and test back up to this swing high. As far as potentially 37.75, and this low volume area is where I'd start to expect to see if sellers are going to step back in, and the overall context and condition of these buyers and sellers is that they really do want price lower, then this would be an area that I would expect to start to see sellers, and possibly up here around 44, 44, 75, 44 level. So what I'm looking for this morning is, after the open, where does the market start gaining acceptance? Is it above 1907, 1906, 75? So if we start getting a volume profile that starts developing out and we can see a taper or very low volume down in this area, and volume starts growing, then I'm going to look for a long position, and I might need the intraday order flow chart and the intraday volume profile to look for a long position to take that up towards 14 to 15 level. And I'll look to take some off right in front of that. And if we start getting more volume up here, I'll look to hold to 17 and possibly higher. I think a question about how to go back to May. One of the issues with the contracts, of course, is that you're using only the contract. So, like, if you're using the September contract, then you're going to have a little bit of issue going back with data. And DB and I are going to go through that after the session today, and then I will make a video that'll be out on the website for everybody, so that you can everybody can see how to use the continuous contract to go back across contracts, which is necessary for oil as well. So I want to make sure, based on everything we talked about, the elements of the volume profile, which is high volume areas act as magnets, right? They're fair price. So at fair price, we expect rotation, right? Because fair price says that both buyers and sellers are engaged in trade. And so if this 1907, 1906, 75 area, sellers can't get price down through here, and this is rejected and price starts moving up, we would start to look for price to move up to this 14, 15 level and test 17. And if price comes through this 17 level, and again, you need to understand that even though it comes through 17 quarter, it may still come down. So this is our longer term guideline. What we need to refer to is the day's activity, because the current day is the best context for the current buyers and sellers. What that means is, if in the current day the market shows a strong low volume area at 1450, then there might be a trade if it comes through at 17, but I'm going to look around 1475, 15 level for that long, and I'm going to use the intraday profile to give me a little better guidance. I'm going to put a little more weight in the intraday profile. But what I'm looking for is price to start to move back up to 24. So I'm hoping that makes some sense, right? If you understand the elements of the volume profile, you understand that the green lines, high volume areas, become a magnet for price. The red lines, price either breaks through or it becomes like a brick wall where price bounces off of. So right now we're above this 675, 7.25 level. And so as we look at our overnight, we have a very, very solid low volume area in the overnight here. And we have one down at 1902.50, which is pretty close to our, we have a high volume area, a composite high volume area, 1902.25. So what that means is, since we're above this right now, I'm considering this to be an unfair low, especially given what price has done so far. So what that means this morning is I will look for a trade in this area between 1906.75 and 1907.25. I'm going to use the intraday profile and the intraday auction to give me guidance. Now, if for some reason this drops down here before the open and drops down below 06.75, that may change. So I put all of my data in, and I'm doing an assessment. Is price trying to go higher, lower, etc. And then I come to this chart. I put in the previous day's close, and for my daily, midterm, and a little longer term, which actually right now are the same, midterm and long term are the same because we're at all-time highs, I put in the high volume areas that are above. So basically I'm taking the high volume areas from this chart, the longer term chart, and the low volume areas, and I'm just plugging them in. And what I'm starting to look for across these things are confluence. I'm looking to see where the daily, and right now this is the same, they start lining up. and where I have agreement, and that could be within a point, especially with the high volume areas. So right here at 2075 and 21, that is agreement to me. That's close enough. So what I would put in here is 1920.75 to 1921. And now what I'm looking for this morning, if price starts moving up, my expectation is that in the current day's volume profile, we would start to see rotation around this range, and we would start to see the profile show volume. If that doesn't happen, and the volume in the volume profile becomes very thin up to this level, and price starts moving back down off of that level, then I start looking at the next low volume area at 17.25, and I start looking at that one potentially as a long, but if it bounces off of 21 hard, then my trade that I really want is I want to see price come through 17 and then take a short on a retest. Because if this isn't fair price for buyers up here, then they'll start looking for another area. That might be here, but I'm going to let the print start telling me what I need to do. So then once I have all these numbers plugged in, then I move over to a trading plan and I talk through the day. A big range, much more volume, higher highs, lower lows. And then I start looking at the numbers that came off of this chart, right? The low volume areas, the high volume areas. And I start plugging those in to start building a script for my plan. So the 1975.25 low volume level was broken with over 30,000 contracts. What that means is when sellers came through this level, they came through hard. There was a big push of volume just in a matter of minutes. So sellers showed some serious through that level. That's important to me. That's the most current context up at 17.25. Doesn't mean it'll happen again. Doesn't mean it absolutely will. But it tells me the context here is that sellers showed some conviction up there. The last test high for the day was up at 650, which is close to that 675, 7.25, which is a composite low volume area. And beyond that, the test was up to the last test high was to 1375. And so that's another place where I'm looking for sellers to come in. And if you look at what's happened so far in the overnight, where does it test up to? Right to 1375. Okay, we got our open. And the open price is at 1909. Wrong chart, sorry. All right, that was the wrong chart. 1909. First swing high was here, 1910. Now we're coming down to this level 675 to 07. Because we're coming down here, here was my first opportunity for a trade. We're down to 775. Remember, this was a composite, not composite, but this was a low volume area in the overnight as well.